Hey guys, welcome back to the channel. My name is Alex, and in this video I want to show you why the market actually has a very high chance of crashing here in 2021. And before we get started guys, I want you to understand that I'm a long-term investor myself, and so by making a market crash video like this, I am not trying to attack anybody. I understand it's a highly controversial and also a very defensive and emotional topic. But with that being said, guys, as a trader and an investor myself and someone who avidly studies the market day in and day out, I would like to show you some things that you possibly weren't considering and hopefully open your eyes to the bear signs we have here and why it actually increases the probability of a market crash here. So please keep in mind, guys, we're going to be as objective as possible. We're going to try to be as logical as possible, and ultimately just try to open your eyes to some of the things that you might not be seeing. Okay, so with that being said, let's get right into it, and I hope you'll really enjoy this video, and if you do, drop a like on it. Okay, so starting off here, you can see the S&P 500 is soaring higher. We finally had a couple down days, but by the time you're watching this video, it probably doesn't even matter. So look, you can see market's in a clear uptrend, but here's something you probably weren't paying attention to, is the VIX. We all know VIX is the volatility index. It measures the fear in the market, okay? And so look what's happening to the VIX actually. It's also uptrending. And what do we know about the VIX, guys? If you're new to trading, you're new to investing, I'll tell you real quickly. VIX is supposed to be inversely correlated to the S&P 500, right? And so when we see the market going higher and VIX going higher, this actually tells us that this is a big divergence between the two indexes here of volatility and the market. And so basically, as the market goes higher, the fear is also going higher, but it should be the opposite. When the market's going higher, okay, fear should be going lower, okay, but that's not the case here. Volatility continues to rise with the market, and well, this is an inverse correlation that has not inversely correlated in the last month, and so this is flashing huge warning signs at us right now currently, saying that there's a big potential for market crash if this divergence here does not fix itself, right? If we are bullish on the market, we want to see VIX going down, okay? We want volatility, we want fear to go down, but if that's not the case, well, guess where we are right now? We're pretty much at the top of the S&P, which means we've got a whole lot of downside, and if you look at the VIX chart, guys, we've got a lot of upside, right? And so I just want to show you, if we draw a straight line here, okay, see that? Every time we get to the bottom of the trend, what are we doing? We're breaking out higher, okay? And so I remember a couple videos ago, we had a guy saying he was selling 3,800 puts on the S&P, and guys, I just dug my head in my hands, and I was just so disappointed, okay? It's sad to see that guys don't, pay attention before selling puts. You should always be paying attention before taking a trade, and maybe the guy just doesn't know, okay? I mean, it just clearly shows that if you're trying to sell puts with this VIX uptrend we have, this VIX divergence, you just clearly aren't paying attention, and you've got no clue what you're doing, okay? And so this is exactly why you want to be very hesitant with your bullish positions currently, is because of this uptrend. So what I recommend you do is literally just draw an uptrend line on the VIX here. You can go in your Thinkorswim charts, wherever you chart your things out, and I mean, it's very clear, okay? And so every time we reach the bottom end of this trend, okay, we're bouncing off, spiking higher, and that's clearly not a good sign for the market right now. And so we're very, very cautious when we've got this clear uptrend in the VIX as the market goes higher. So please keep an eye on that, guys. If you did not see that, well, I'm glad I can point it out for you, and this is going to be very important. So look, as long as the VIX continues to uptrend with the market, the chances for the market to finally crash are just increasing, because what is happening to the VIX? It's getting higher and higher, which means if the VIX is getting higher, that makes for bigger, larger size, and more panic selling moves. Okay, so you got to be ready, and you got to be paying attention to VIX at all times with this uptrend we have. Okay, so hopefully that is pretty eye-opening for a lot of you guys watching this video. That's the first major thing I can point out to help you be aware of the market crash potential. Okay, so hopefully you're finding use in breaking this down from a technical and chart perspective, okay, because what you'll realize is this is a fact. VIX is uptrending, going higher. But what's not a fact, and what a lot of people like to do, is create stories, okay? So a lot of people like to say, I believe the market will crash because Donald Trump's not in office anymore. I believe the market will crash because of this, because of that. But there's no numerical value attached to that, and so it's not a fact. Okay, but what is a fact is that VIX is continuing higher, and that's why we like to look at things from a technical perspective first, and we can always dive into the fundamentals later. Okay, so that's your first technical aspect that you should be paying attention to. The VIX, keep eyes on it, pay close attention, and with that being said, I'm going to show you the second major reason for why the market could crash here in 2021. So take a look at this. Back in 2017, Bitcoin crashed from 20,000 down to 3,000. Now, if you'll take a look at the S&P 500 during that time, you'll see that Bitcoin crashed here December 18th. Okay, and that's with this arrow. But what actually happened to the market is it got one leg up higher, okay, and then the market crashed shortly after Bitcoin. So look, what this marks is pretty much the pivotal point where inflation becomes priced in the market. And so you can clearly see this on the US dollar chart here. As the US dollar bottoms here in 2018, the market in Bitcoin crashed. And as the US dollar bottoms here currently at these same levels, well, what does that lead us to? A much more significant chance of a market crash, right? And so look, it's a fact here once again that the market crashed 1 month after the Bitcoin crash. Okay, and what do we have in Bitcoin currently if you haven't seen? Okay, it has begun to crash from 42,000, already hit a low of 30,000, and we're likely to continue lower. And so once again, what happened last time? Well, the market crash came just 1 month after the Bitcoin crash, and this is a fact, right? There's no narrative, there's no story here. It's a fact. The market crashed 1 month after Bitcoin. And so once again, what you're going to find so interesting is that we have an identical dollar setup. So last time the dollar went from 104 to 89, then the market crash happened. This time around, the dollar goes from 104 to 89. What's going to happen? Well, it hasn't happened yet, but like I said, from our analysis here, we believe it's highly, highly likely. And so we're just trying to be ready for it, okay? So that's your second major bearish reason, is that inflation could very well be almost priced into the market here, and that's going to lead to a market top and a market reversal. And especially we've seen the dollar where it's at, the level, and we've seen Bitcoin here, and how the market followed its crash just 1 month after. Okay, so keep that in mind. That's your second very bearish factor in this video. Third bearish factor for the market we have here, guys, you have to realize that market leaders are starting to exhaust. Market leaders are running out of gas, and I can show you that with Apple and Tesla, which is one of the main reasons we were able to predict the previous market correction of about 10% in September. Okay, so take a look at this. Apple, okay, has double topped out. Okay, and what you didn't realize probably is that this crash in Apple, not crash, but this drop that's began in Apple was easily identified by looking at the Apple volatility. Okay, so take a look at this. November 18th is where this uptrend in Apple volatility began. Okay, and what happened? Well, November 18th is exactly where pretty much Apple began to skyrocket higher for the next month, right? And so as Apple continued higher, what happened to the volatility? It went higher, which is not how it's supposed to work. Remember, volatility and the index, volatility and the stock, they're supposed to be inversely correlated. And so as volatility got higher, 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 Apple finally dropped hard here. And so it's got a lot of downside here. Because why? Because Apple volatility's got a lot of upside here, right? And so that is a very simple market leader we can identify that's run out of gas and unlikely to get higher than its all-time high levels here on this chart, right? Second market leader you're seeing is running out of gas here is Tesla. Okay, I think most people would agree now that Tesla is finally priced in actually, and it's most likely hit its top. Now guys, I know we've always got bullish Tesla investors who always get very upset when we say things like this, but remember guys, we're trying to be objective, and the rate of change, the rate of growth Tesla's had, is highly unlikely to sustain it, that upward trajectory at that rate forever. And so for that reason, it's very likely that this is actually and finally the top for Tesla for however long this top might last. Okay, so boom, you've got Apple, you've got Tesla showing clear signs of a top, showing signs of exhaustion, and they look unlikely to push higher. Now let's look at one more market leader, okay, Amazon. Okay, so Amazon here you can see has been clearly downtrending since September. And so once again, what is Amazon? One of the greatest, one of the biggest companies in the world, and even they are showing signs of exhaustion and clearly downtrending. So once again, if your top three market leaders, Amazon, Tesla, and Apple, are running out of momentum, well, then what actually happens next is everyone shifts to this growth versus value narrative. So what people think is, oh, if they're going to rotate out of these big tech stocks, well, then they're going to actually go to value stocks like Boeing, like travel stocks, right? Because they think the value in these is that they're going to recover over time. So what happens? RCL gaps up, it goes parabolic and sets a top, and now they're downtrending there. Now, look, maybe that doesn't look like a downtrend yet, but remember, we're trying to catch these things before people see it and before it's obvious to everyone. So we believe that this is the top for RCL, and then we're shifting to downtrend here, and time will tell, right? But check this out. Boeing is a much clearer downtrend. So once again, vaccine news comes out in November. Everyone shifts to value stocks. These value stocks go parabolic, go higher. Boeing sets a top, and what is it doing? Clearly downtrending there, and that's as clear as a downtrend can get, right? So once again, there's that growth versus value narrative when people think, okay, they're going to rotate out of tech stocks and then they're going to rotate into value stocks such as Boeing, but you'll see that even these value stocks have actually set a top now. So that leaves us to one more sector we need to focus on, which is actually going to be bank stocks, because this is another type of value stock that has not set its peak yet, that has not showed signs of exhaustion yet. But guys, remember, to predict things in advance, you have to see things before they happen. And I'm about to show you why banks are about to top out, which is going to lead to pretty much the overall crash here coming soon. So take a look at this. Goldman Sachs, it's hit a top, okay, and it's releasing earnings this week. Now, what have we noticed about all bank stocks so far that have reported earnings that we nailed last week on the channel? BlackRock completely, dumps off. Citigroup dumps off 7% in just one day. Wells Fargo, guys, dumps off 8% in just one day. Okay, so what is this telling you? Well, remember, banks were surging higher because they were expecting great earnings, and they had exactly that, guys. Check this out. For example, Citigroup had a surprise beat of 55% on their EPS. So incredible earnings. They destroyed the estimates, but even this complete kill on estimates, okay, guys, even that was not enough to push these banks higher, which shows you the top of the banks that no matter how good these earnings are, that's the reason these things shot higher in the first place. And so it's priced in, and banks are now setting a top. It just hasn't happened yet on the chart, but you're going to see, guys, banks are going to set a top. Banks are going to start dropping here in the near term. And, well, once again, what sector do you have that's bullish then, guys? You really don't have anything, okay? The market leaders are exhausted. The value stocks such as Boeing, the travel stocks, RCL, United Airlines, all those are exhausted. They're downtrending. And then banks are the only thing we have left that's going to shift into a downtrend soon, which is going to put us into a bear market, guys. Now, one more argument I know a lot of people have is we've got stimulus to push us higher, but that is a very good counter, and I would have to agree with you that stimulus is our only hope at this point to keep the markets higher. Because remember, what was our second reason for why the market would crash? Because inflation would be priced in. But if we go ahead, print another $2 trillion, well, you better believe inflation's likely not going to be priced in. You can believe that the dollar is probably going to continue actually lower than this level in which we crashed in 2018. You can believe that Bitcoin's going to get another spike and that this won't be the Bitcoin crash here in 2021 yet. Okay, keyword yet. And so stimulus can absolutely delay the market crash. And that's why I'm saying that this market crash could happen before February of 2021, or it might actually be delayed till further later in the year, depending on if we get that stimulus, right? And so once again, inflation is so important when it comes to identifying the market top. And based off the dollar chart, currently with no stimulus, this would set the top for the market. But once again, if we do get that stimulus, the dollar's probably going to continue lower and break this 89, 88 level, and then we are going to continue higher likely, right? But remember, as of now, we don't have that stimulus. As of now, everything else is showing signs of exhaustion, and for that reason, we're bearish currently now. We're switching from, you guys have known, we've been bullish on the market for the last months. We've been very bullish, but once again, for good reason, because things were bullish, but now they're showing signs of exhaustion. It's time to be objective. It's time to be a shark, as we say, and understand what's going on here. Okay, and so we really dove into this and went in detail over the major sectors, over inflation and how it's being priced into the market. Okay, and so just when you thought that we couldn't come up with any more bearish factors for the market, we actually have one last factor I'd like to point out, which is extremely important. And I just want to say before we get into the put to call ratio here on the market. I'm not trying to lose you beginner investors here, traders who are new to this. I'm going to try to explain this so it makes sense. So put to call ratio, what does this mean? Currently, if we're at 0.45, all it means is that way more calls are being bought than puts. And so you're probably thinking, oh, well, that's really good. That means that everyone's bullish, and why should we be worried then? Okay, well, what you'll notice is actually, if you zoom out, okay, 75 years, now put to call ratio chart's only been up for like 25, but if you'll see here, 0.45 puts us extremely close to our all-time lows in the put to call ratio here back in 2000 and 1998, okay? And so what this pretty much means, well, first off, you want balance in the market. And so if this thing's at its all-time lows for the put to call ratio, well, the first thing that's going to do is try to create balance. You're going to see it shift upwards likely. Okay, and so once again, you're thinking, okay, well, if the market's so bearish, Alex, why is everyone buying calls then? Clearly, this is a bullish sign. Well, once again, it's about balance in the market. Typically, why? Right, let's go back to 10 years. The put to call ratio is never down at 0.45. You have a much more balanced level of about 0.65, right? So overall, you usually got a little bit slightly higher, bullish sentiment, but currently it's so damn bullish. Okay, and once again, you're thinking, that's good, Alex. No, because you want balance in the markets for it to be sustainable. And so when you're at the low end, you're going to expect it to go higher actually at this level, or be very close to shooting higher at this point. Okay, and so once again, I would like to point out one more thing about this put to call ratio. Okay, take a look at this in March. When we got the crash. I'm actually going to zoom out to 2 years so you can see this clearly. Okay, so what was happening in March? Well, put to call ratio is falling down to about 0.5, and what did it do? It bottomed out. Okay, and so what happens here, put to call ratio, very, very low on this chart, right? Historically, we see it's usually in the 0.65 to 0.7 range. But here, everyone was so bullish before the market crash in March. Okay, and that just shows you right there. Everyone's so bullish, and then the market crashes. What happens? Everyone starts buying puts. Once again, what's happening now? We're bottoming out. Everyone's so freaking bullish. They're raging bullish. And what's going to happen? As soon as we get a spike in the market lower, everyone's going to start buying puts. Everyone's going to panic. They're going to sell. And the put to call ratio, you're going to see it shoot out to create balance and come reach us in the middle here. And that is going to create, guys, the market crash in 2021. So guys, we went over so many things in this video, so many factors you would have probably never considered, never understood. And so I really hope you took out a lot of value from this video. I hope you learned a lot of great things here. And I hope you're at least aware of the possibilities and some of the bearish factors that go into a possible market crash here in 2021. So here's a little conclusion for you to take a picture of, because sometimes you watch a 20-minute video and you'll completely forget everything you watched, which means you just wasted your time, guys. We don't want you to waste your time here. We want you to make money, and we want you to trade like a shark. Okay, so here, take a picture of that, but we'll go through it real quickly. Remember, dangerous VIX divergence. Okay, the VIX continues higher with the market. That's a very dangerous warning sign flashing at us. Number two, the Bitcoin has begun to crash. Okay, and basically last time Bitcoin crashed, the market crashed just 1 month after, and that marks the point where inflation could finally be priced in. But obviously, if we get another $2 trillion pumped in the market, that could change. Okay, and that could actually delay this crash. Number three, market leaders and the growth stocks are exhausted, such as Apple, right? Double topped. It's really got a lot of downside here. Apple volatility continues to uptrend, which is not good. Okay, Amazon out of juice. Okay, Tesla out of juice. Okay, and so when your growth stocks aren't growing, what do you look forward to? You look to your value stocks, but then we see value stocks such as Boeing are downtrending. They have no juice, guys. And so really the only value stocks you have left are the banks, and they're about to set their top after earnings once they report these great earnings and aren't able to move higher. And so then you have really no stocks that are bullish at this point, not the major ones, not the important ones, right? And so then the last reason, put to call ratio close to its all-time lows, and typically you're going to want to see a bounce to create balance in the overall sentiment of the market. And so when it's at its all-time lows, like I said, expect balance to be restored. So those are your 4 major reasons for market crash in 2021. I really hope this helped you out, guys. If you want help trading these crashes, if you want help actually being able to read charts like this, guys, we only dived into the basics here, okay? But when it actually comes to reading charts and trading it, keyword knowing when to trade them, when to get in, when to get out, and so that you can actually profit off of it, that's a whole nother story. So click the link below in the description to learn how to read charts like a pro, okay? And with that being said, guys, drop a like on the video if you haven't already, and make sure you're subscribed, guys, because we do more videos like this in the future that are going to help you a lot if you found this one useful. By the way, if you made it to the end, guys, it means a lot, and I hope you know that you're a way above average person if you made it to the end, because 99% of people, they can't even sit through a video here like this. They get lost after 2 minutes. They rather go back to Wall Street bets, or they rather go back to doing something dumb that actually is just storytelling. For example, one guy, he's gonna say, oh, I believe the market crash is gonna happen because Donald Trump's out of office. Like that's storytelling. It has no factual evidence behind it, and it really means nothing. But what we did in this video is we went over factual evidence, things that are factually pointed out to on the charts, and that's a complete difference, and it's something that you can really use in your trading. So guys, at the end of the day, charts is by far the most important thing when it comes to your trading, and so I hope you'll take advantage of our charts course and learn how to do this on your own, but actually be able to do this on a day-to-day basis and be able to trade it to make money, guys. My name is Alex. I hope you enjoyed the video. Thank you so much for watching. Let me know if you got any questions, and I will see you guys on the next video. Bye.